Sometimes the market is not your biggest enemy. Sometimes it is you, not your strategy, not your indicators, not the market makers, not the news, your reactions. Because deep down, most traders already know many of the things they should be doing. They know they should wait longer for quality setups, risk less, stop revenge trading, and avoid forcing trades out of boredom. And yet, they still do it. That is the uncomfortable realization many traders eventually face after enough time in the market. The real problem was never only the charts. It was the emotional reaction to the charts. And the strange part is that most traders do not lose because they lack information. They lose because emotions slowly begin taking control of execution. One impulsive entry, one oversized position, one emotional decision made under pressure, one trade taken out of frustration, small mistakes repeated over and over again. That is how accounts slowly bleed over time. Not through one dramatic moment, but through emotional habits repeated every single week. And eventually, many traders realize something difficult. They are no longer trading the market clearly. They are trading against themselves. The invisible battle. From the outside, trading looks simple. People imagine charts, candles, entries, profits, and fast opportunities. But after enough time in the markets, you begin realizing that trading is far more psychological than most people expect. Not because psychology sounds motivational, because money changes human behavior. You can study charts for years. You can understand support and resistance, liquidity, risk management, and market structure. But the moment real money becomes involved, something changes internally. Your heart rate increases. Your thoughts become louder. Patience suddenly feels harder. And the calm, logical version of yourself slowly starts disappearing. That is the invisible battle most traders never fully understand. The market is not only testing strategy, it is constantly testing emotional stability. And emotional instability creates expensive decisions very quickly. You move stops because you want relief. You enter too early because you fear missing movement. You close winners too fast because uncertainty feels uncomfortable. You hold losers too long because accepting losses feels painful. And eventually, trading becomes emotionally reactive instead of structured. The dangerous part is that in the moment, all of it feels completely reasonable. That is why emotional trading becomes so difficult to notice. Emotions rarely sound emotional. Most of the time they sound logical. Maybe this breakout is different. Maybe I should risk slightly more. I can recover the loss quickly. I do not want to miss the move. Little by little, emotions begin negotiating with the system. And once that starts happening consistently, trading slowly becomes chaos. Many traders also underestimate how quickly emotional pressure changes decision-making. A calm trader can follow rules clearly, but an emotionally overloaded trader begins looking for shortcuts everywhere. And shortcuts in trading usually become expensive. That is why two traders can understand the exact same strategy and still produce completely different results. The difference is often emotional execution. One trader remains patient. The other begins forcing opportunities because sitting still feels uncomfortable. One trader accepts losses calmly. The other starts reacting emotionally after every setback. And over time, those emotional differences quietly create very different results. Your emotions sound like logic. One of the most dangerous things in trading is that emotions often disguise themselves as intelligence. Fear sounds like caution. Greed sounds like confidence. Revenge sounds like opportunity. Even boredom can sound productive. That is why so many traders keep repeating the same mistakes. Not because they are stupid, but because emotional thinking feels convincing in real time. A trader tells himself, "This setup looks close enough." And suddenly, he enters a trade he normally would avoid. Or, "I just need one good trade to recover." And suddenly the risk doubles. Or, "I have been waiting all day. I deserve to take something." And suddenly patience disappears completely. The emotional mind is constantly searching for relief. Relief from uncertainty. Relief from frustration. Relief from boredom. Relief from fear. But professional trading often requires the opposite behavior. It requires waiting while uncertain, staying calm while uncomfortable, doing less when emotions want more. And emotionally, That becomes difficult for many traders. That is why trading starts feeling mentally exhausting after long periods of screen time. Most traders are not only analyzing charts, they are constantly managing internal pressure without even realizing it. The pressure to recover losses, the pressure to catch moves, the pressure to feel productive, the pressure to feel in control, and eventually that emotional pressure becomes heavy. Most traders never properly train this skill. They spend years learning strategy while completely ignoring emotional behavior. So they continue searching for new indicators, new systems, new mentors, new strategies, while the real problem quietly follows them everywhere. Their reactions. Eventually, the trader becomes trapped inside a cycle. Study, trade emotionally, lose discipline, feel frustrated, watch more videos, repeat. And this cycle can continue for years because knowledge alone does not automatically create emotional control. At some point, the trader realizes something uncomfortable. Information is not the same thing as emotional discipline. Many traders also confuse activity with progress. They believe that more screen time automatically means improvement. But emotionally overstimulated traders rarely execute clearly for long. Eventually, the brain becomes tired, and tired traders begin reacting impulsively to pressure, the self-sabotage loop. Most traders do not destroy themselves in one dramatic moment. It happens slowly, one emotional decision at a time. A revenge trade after a loss, a stop moved slightly further, an oversized position after confidence quietly turns into ego. Individually, these decisions do not feel catastrophic, but together, they slowly damage consistency. That is why emotional trading becomes so dangerous over time. Sometimes emotional behavior still works temporarily. The revenge trade wins. The bad setup survives. The oversized position moves into profit, and that creates dangerous reinforcement. The trader slowly starts trusting emotions more than structure. Eventually, the market humbles that behavior. Not immediately, but eventually. Because emotional execution is unstable by nature. This is where deeper frustration usually begins. The trader starts blaming himself. Maybe I am not disciplined enough. Maybe I am not smart enough. Maybe I am not built for trading. But often the real issue is much simpler. The nervous system is overloaded. Too much chart watching. Too much reacting. Too much noise. Too much emotional pressure. And eventually, the brain becomes exhausted. A noisy mind creates noisy execution. That is why calm traders often perform better. Not because they know everything, but because clarity improves decisions. There is also another dangerous pattern many traders quietly develop over time. They begin attaching their identity to trading. A losing trade no longer feels like, I made a mistake. It feels like, I am a failure. And once trading becomes personal, emotions become much heavier. Losses feel painful. Missed trades feel personal. Winning becomes emotionally necessary. That pressure changes behavior dramatically. The trader stops focusing on process and starts chasing emotional relief. That is when revenge trading appears. That is when desperation quietly enters the system. That is when risk management slowly disappears. Many traders believe they are trying to make money, but emotionally, they are often trying to protect their ego. And ego creates dangerous trading, because ego hates waiting. Ego hates accepting losses. Ego hates missing moves. Ego wants action. Ego wants validation. But the market rarely rewards emotional urgency. It rewards stability. This is why some traders study for years and still struggle. Not because they lack intelligence, but because internal noise keeps interrupting execution. Eventually, trading starts feeling exhausting. Not because charts are complicated, but because emotional instability consumes enormous mental energy every single day. And the longer this continues, the more trading starts affecting life outside the charts as well. The trader becomes mentally distracted, emotionally drained, constantly thinking about missed opportunities and previous mistakes. Even when the charts are closed, the pressure remains inside the mind. The turning point. At some point, many traders experience a turning point. Usually, it is not dramatic. It is exhaustion. The trader becomes tired of emotional chaos, tired of overtrading, tired of constantly fighting the market, tired of feeling mentally drained after every session. And slowly, a different realization begins appearing. Maybe trading is not about forcing more. Maybe trading is about reacting less. Less impulsive behavior, less emotional urgency, less need to constantly participate in every move. Because the market does not reward intensity, it rewards clarity. And clarity usually appears inside calmer minds. This is why many experienced traders eventually simplify almost everything. They trade less, they wait longer, they risk smaller. They stop trying to catch every movement. They stop staring at charts for endless hours hoping to feel certainty. From the outside, it almost looks boring. But internally, it creates stability. And stability changes everything. Once emotional chaos becomes quieter, the trader finally starts seeing the market more clearly. He stops chasing candles. He stops forcing opportunities. He stops reacting emotionally to every breakout and rejection. Instead of protecting ego, he starts protecting energy, focus, and execution. And strangely enough, that calmer version of trading often becomes more profitable over time. Not magically, not instantly, but consistently. Many traders think discipline means becoming emotionally cold, but real discipline is usually much quieter than that. It is simply the ability to pause before reacting, to sit with uncertainty without needing immediate relief, to accept that missing one trade will not destroy the future, to understand that protecting clarity is more important than constantly staying active, that emotional maturity changes trading completely, because now, the trader is no longer reacting emotionally to every candle. They are observing with structure instead of urgency. And over time, calmer decisions slowly begin replacing emotional survival mode. Eventually, the trader also realizes something important. Not every day in the market deserves participation. Sometimes the best decision is doing nothing. And emotionally, that can be one of the hardest skills to learn. The real edge. Most traders spend years searching for an edge, but eventually many professionals discover something surprising. The real edge is often emotional stability, because strategies are everywhere, information is everywhere. But calm execution under pressure? That is rare. The ability to stay patient, follow rules, accept losses calmly, and avoid emotional spirals changes trading completely. Not because the trader becomes perfect, because the trader becomes stable. And stable traders survive longer. That matters more than most people realize. Trading is not only about making money. It is about surviving long enough to improve. And survival requires emotional control. This is why profitable traders often appear calmer over time. Not because they stopped caring, because they stopped fighting themselves. They no longer need constant excitement. They no longer chase every candle. They no longer react emotionally to every move. They understand that not every setup deserves risk, and not every movement deserves attention. That understanding creates peace. A calm trader sees structure. An emotional trader sees urgency everywhere. This is also why experienced traders protect routines carefully. Simple habits create emotional balance. Wake up calmly, analyze clearly, wait patiently, trade selectively. Stop when emotional. From the outside, these habits may look repetitive, but repetition creates consistency, and consistency slowly builds real confidence. Not ego-driven confidence, real confidence. The kind of confidence that no longer needs constant action to feel in control. That is when trading finally becomes sustainable. Not because the market changed, because the trader changed. And once that happens, trading no longer feels like constant emotional warfare. The trader stops trying to prove something every single day. He simply focuses on executing clearly and protecting stability over time, but consistently. Many traders think discipline means becoming emotionally cold, but real discipline is usually much quieter than that. It is simply the ability to pause before reacting, to sit with uncertainty without needing immediate relief, to accept that missing one trade will not destroy the future, to understand that protecting clarity is more important than constantly staying active. That emotional maturity changes trading completely, because now the trader is no longer reacting emotionally to every candle. They are observing with structure instead of urgency. And over time, calmer decisions slowly begin replacing emotional survival mode. Eventually, the trader also realizes something important. Not every day in the market deserves participation. Sometimes, the best decision is doing nothing. And emotionally, that can be one of the hardest skills to learn. If you have been struggling in trading, maybe the answer is not another strategy. Maybe the answer is understanding how you respond under pressure, how you react to losses, how you react to boredom, how you react to uncertainty, how you react to fear. Because those reactions quietly shape your results. The market will always create pressure. That part never disappears. But emotional awareness changes how you respond to that pressure. And once that begins happening, trading slowly becomes calmer. Not easier, but clearer. You stop trying to control everything. You stop forcing opportunities. You stop fighting yourself. And that is often where real progress finally begins. Not in the charts, but in the mind of the trader watching them. Because sometimes the biggest breakthrough in trading is realizing the market was never your only opponent. And once you stop trading against yourself, everything starts changing. If you enjoyed this video, please like and subscribe to The Patient Trader.